1. Balance sheet. The balance sheet has three major components. Assets, resources owned by the company that have future economic benefits, such as cash, accounts receivable, inventory, property, plant, and equipment. Liabilities, obligations of the company to pay a debt or provide a service in the future, such as accounts payable, loans, bonds, and salaries payable. Equity, the residual interest in the assets of the company after deducting liabilities. It includes share capital, retained earnings, and other equity items. The balance sheet can also be classified into current assets and liabilities, non-current assets and liabilities, and shareholders' equity. 2. Income statement. The income statement has several major components. Revenue, the total amount of sales or services provided during the period, such as sales revenue, interest revenue, and rental revenue. Cost of goods sold, the direct costs associated with producing or selling the products or services, such as raw materials, labor, and overhead. Gross profit, revenue minus the cost of goods sold. Operating expenses, the indirect costs associated with running the business, such as salaries, rent, utilities, and advertising. Operating income, gross profit minus operating expenses. Other income and expenses, non-operating items such as interest income and expenses, gains or losses on the sale of assets, and income taxes. Net income, operating income plus other income minus other expenses. 3. Statement of changes in equity. The statement of changes in equity has several major components. Share capital, the amount of capital invested by shareholders through the purchase of shares. Retained earnings, the cumulative profits or losses of the company that have not been paid out as dividends. Other equity items, items that affect equity, such as stock options, warrants, and other equity transactions. Total equity, the sum of share capital, retained earnings, and other equity items at the beginning and end of the period. 4. Statement of cash flows. The statement of cash flows has three major components. Cash flows from operating activities, the cash inflows and outflows associated with the company's core operations, such as cash receipts from customers, payments to suppliers, and payment of salaries and taxes. Cash flows from investing activities, the cash inflows and outflows associated with the company's investments in long-term assets, such as property, plant, and equipment, and investments in other companies. Cash flows from financing activities, the cash inflows and outflows associated with the company's financing activities, such as proceeds from issuing bonds or shares, repayment of debt, and payment of dividends. The statement of cash flows can also be classified into operating cash flows, investing cash flows, and financing cash flows.